It is 4 o'clock. I'll call to order this meeting. We'll start with the roll call.
Mayor Sue Patterson,
Present.
Deputy Mayor Warren Dicker,
Present.
Councillor Harold Fleet has sent his regrets, Councillor Dave Hawking,
Present.
Councillor Carol Hudson,
Present.
Councillor Brandon Cable,
Present.
Councillor Susan Sackle.
Present.
Thank you, Vicky. The land acknowledgement. As we work toward reconciliation with Indigenous people, we begin our meeting today by respectfully acknowledging that we are situated on the traditional territory of the Anishinaabe Nation, the people of Three Fires known as Ojibwe, Odawa, and Potawatomi nations, and further give thanks to the Chippewas of Saugeen and the Chippewas of Nawash, now known as the Saugeen Ojibwe Nation, as the traditional keepers of this land. So welcome to our Finance Committee meeting for Monday, April 27th, 2026. Good afternoon, council, staff, guests, the viewing public, and the media. And I will ask at this time if anyone on council has a disclosure of pecuniary interest or a conflict of interest. And of course, if one should arise during the meeting, you may declare it then. Item 4, we do not have any additions or deletions, so we'll move right into delegations, and I will ask Yelena to introduce our delegation, please.
Thank you through you, your worship. Today we'll begin the Finance Committee meeting with a delegation from One Investment. Joining us today are Jason Hagan, Program Manager, and Keith Taylor, Chief Investment Officer with One Investment. Thank you both for being here. You'll recall at the prior Finance Committee meeting, we discussed the investment policy for the town and with a focus on what the eligible investments were, the town's risk profile, differing risk profiles for different types of investments, and how that aligns with our existing reserve and reserve fund strategies. So the objective of today's presentation is twofold. One is to build on that presentation and that discussion with a further explanation of how municipal investment is legislated and how it works through the One Fund, and then to introduce council to the concept of a legacy fund. So what that might look like at the town of Hanover, what the implications for that are, and what the governance structure for that would be. So with that, Jason and Keith, welcome. The floor and podium are all yours.
Excellent. Thank you for having us. My daughter just called me and gave me some advice. Have fun, don't screw up. It's like, thanks. Yeah, it's like, I appreciate your wisdom. Perfect. Well, thank you, Madam Mayor. Thank you, Jelena. Thank you, council members. We're happy to be at this committee talking a bit about, as Jelena said, the role that One Investment plays in Ontario municipal investments, and then also to provide some thoughts and considerations related to your thoughts about a legacy fund for an amount of money that I understand you guys are maybe coming into. So once the presentation is loaded. Uh-oh.
The wonders of modern technology.
Yes.
I know, but as soon as I go to share, it keeps the agenda time out. I share the earlier. What I can do is just zoom in to above Susan as well. Sure.
My daughter may have been onto something today. 17 and 15. It's the 17-year-old. Yeah. Perfect.
There we go.
Excellent. So that works for everyone? All right, so One Investment, and so by way of introduction, I'm Jason Hagan. This is Keith Taylor, our Chief Investment Officer. One Investment is a not-for-profit organization. We've been working in the municipal space, helping municipalities out for about 30 years now. We're jointly owned by two other not-for-profits. One is LAS, which is the business arm of AMO, and the other is CHUMS, which is the business company of the Municipal Finance Officers Association, which is the staff organization for municipal finance officials in Ontario. So I'm on the AMO side, and I have a counterparty that represents the MFOA side. Keith is 100% time spent on One Investment work, but we have this shared approach, which makes us very lean and mean. We get lots done. So we were incorporated in 2018. But we've been in operation before that as a program since about 1993-95. And the purpose of incorporation, among many other things, was to move into a prudent investment offering that we do, and also to get an Ontario Securities Commission that allows us to provide investment advice through our Chief Investment Officer. And at this point in time, 200 municipalities and broader public sector organizations invest with One, whether it's on the short end with bank accounts or on the longer end with Canadian equities or prudent investment. So that's about 40% of Ontario municipalities and about 10 or 15 conservation authorities and district social services boards. So a common question we get asked is, are we too big, too small? Do we fit the mold? This is not meant to be an eye test. It's the Ontario municipal population by category, and you can see everything from very small to very large. And in each one of those categories, the orange column shows you how many of those municipalities invest with One Investment. So whether you're small or large, there's a lot of municipalities like you using One Investment. And on the far end, in the prudent investment category, there's a number of municipalities in each category, population demographic, using us as well. On the next slide, just to give you a sense of scope and scale, this is a tiny bit dated. Right now, we're at closer to $5.8 billion invested, and it's spread over 3 different types of work that we do. What we're here to talk about today is that gold pie on the left, a bit bigger, look like Pac-Man, but $2.8 billion, that's what we invest in legal list portfolios. So that's what will be the focus of today. The blue at the bottom is the high interest savings accounts we offer for municipalities. And those are effectively us acting as an aggregator to bring municipal deposits together to get an incrementally better return than many municipalities can get on their own. And that might only be 5 or 10 basis points extra, but it still supports the municipal objective. And the gray part of the pie is our prudent investment offering. So we've been doing that since 2020, and we invest about $2 billion on that, and that's an optional investment category under the Municipal Act. Next slide is just a bit about kind of our approach to things. We call it investment advisory services, and that's what we're here for today, is to say that whether or not you use One Investment products, MFOA and AMO and LAS, our mandate is to support strong municipal government. So what we want to do is help with investment policies. We want to help consider legacy fund opportunities. We want to talk about policy structure. We want to help people understand the regulations that support municipal investment, even if you don't invest with us. If you've done better, the sector has done better. And at the end of the day, we realize that most municipalities will end up coming to work with us. But if they don't, Keith has often suggested people get a GIC raid with their bank if it's a good one, and because it's the right thing to do. So in terms of our staff complement, there's 3 of us that will typically do the front-facing work. I have a background in municipal policy. I have an MPA degree. Keith is our Chief Investment Officer. He has 30 years plus of Bay Street experience. And then our other colleague, Jennifer Hess, who's from the MFOA side, she has 15 years of municipal practical experience in accounting and financial planning. So next slide, and then one more ahead. I'll just spend a couple of moments here to Jelena's point about talking about the legislative and regulatory environment and how we work within it. Nobody wants a history lesson in the Municipal Act, but suffice it to say that municipalities have a lot of autonomy under the Act, and they have natural person powers in every area except for debt and finance. And Debt and finance is captured under the eligible investment regulation. It's Regulation 438/97, and that regulation has a list of prescripted securities that a municipality may hold. And if it's not on the list, it's not allowed. The list is reviewed every 5 to 8 years, depending on the political climate, small p political, and need in the sector. So as capital markets evolve, the list doesn't change frequently. On the right side, not for today's topic, but there is an option for municipalities to become prudent investors, and then it opens up some additional opportunities. But that's an entirely different discussion and presentation. So next slide. This is just to say that I'm not crazy. This is wording from the regulation. It says a municipality does not have the power to invest in a security other than a security prescribed by this part. So if it's not listed, it's not allowed. Municipalities can own mutual funds unless they can guarantee that it's Canadian only, A-rated and above, and only municipalities own the mutual fund. So generally, there's not a lot of off-the-shelf bank products that municipalities can purchase. Next slide. Where we exist in this space is we realize that this puts municipalities in a very interesting spot, bank deposits and GICs. So some time ago, we created a number of products. Some have been around for 30 years. Canadian equities have been around for closing in on 20. High interest savings accounts for about 10 or 11 now. But what we intend to do is offer an investment option for any investment horizon. All are fully liquid. All provide a benefit that Keith will talk about later when you put them all together, especially in the context of a legacy fund where you want to create a balanced approach to manage an asset that the municipality may wish to keep in perpetuity. I will note that corporate bonds and Canadian equities at the bottom of the presentation have an asterisk. One investment, excuse me, has particular permission in the legislation, and it's a monopoly in those spaces to offer those. We never asked for a monopoly, but the province said we can't watch everyone. And this is some 20 years ago. Next slide, we talked a bit about HISA options or high interest savings accounts. I leave it to your treasurer to discover whether or not these rates are useful for you, but typically these are about 5 to 10 basis points higher than what a smaller municipality might get on their own, and literally no different in terms of the liquidity of the deposit. It's just that we hold it as an interest for account for municipalities. So that's at the simple end. And then if you move on to the next slide, we just wanted to touch a little bit on fees. So Keith will speak to our bond portfolio, our corporate bond, and our equity. But just out of full transparency, these are the fees we charge. So a basis point is 1/100%. So we will do equity investments for a municipality for 0.5% per annum. The HISA accounts cost nothing at all to you, and our bond portfolios are a little bit less, but on the whole, very low management fees to support municipal investment objectives. Next slide is governance. It's not enough for us to think we have a good product that fits the need. We have One Investment has a board of 9 municipal CAOs and treasurers and 1 investment expert that help oversee the business operations. So the financial statements, the budget, et cetera. As well, we have an investment advisory committee with 6 members on it. 1 is a municipal law expert and 5 have financial experience. And they meet quarterly to help meet with the managers to make sure that the actions the managers are taking or the evolving markets and that we're consistent with them and we're doing all we can do within the rigid rules we have to maximize return for municipalities. And with that, I'll pass it to Keith and then we'll share the last section together.
Thank you, Jason. Next slide, please. I just wanted to go through a couple of slides here, some basic attributes of investing. On this particular one, it shows 3 different basic asset classes that you might invest in. The blue line that's kind of flat is the equivalent of a money market fund. This is showing the rolling 12-month returns, and it's pretty flat. There's really no surprises. It doesn't generate a lot of excitement or returns. The red one is akin to a bond portfolio or bond fund. You can lose money in bonds. If interest rates go in the wrong direction, you may be wearing losses. And you can see that there is some volatility. This is again on a rolling 12-month basis. The real excitement comes in with equities, the green line here, where you can have a lot more volatility. The equity markets are the engine of growth of any investment portfolio, but you get that growth because you're basically trading away a bit of a risk for upside. There's more volatility. The TSX, for example, was up about 30% last year. I would not expect that to happen every year. There are going to be years where it misbehaves. Next slide, please. And on that front, there's the concept of diversification. In layman's terms, it's a matter of not putting all your eggs in one basket. We've actually seen this in market performance. And the chart here, the red chart shows where the equity market has misbehaved in any one given period. And you can have some very sharp losses. But typically when investors are getting rid of risk, they're afraid, they're running from the market, they park that money in something safer, like bonds. And you often see an exact opposite reaction from the bond markets. When equity markets are very weak, bond markets tend to hold up well. So if you have both in your portfolio, that's the idea of diversification. The weakness in equities is compensated by what happens in the bond market. Doesn't happen always, but very often. This just shows the pattern and the actual numbers in terms of how equities and bonds have reacted when there's a large move. The next slide kind of looks through that volatility. I almost forgot we had this one in here. And this is a long-term return chart. It assumes that you put $100 in the market in 2002. And you just reinvested all the other dividends or coupons or whatever over that period of time. And if you put $100 in 2002 in a bond portfolio, you would have more than doubled your money. You would have about $243. If it were in equities, it's closer to 1,000. And that just attests to the fact that there's a lot more growth potential. Typically, these are very rough numbers. From a bond investment, you'd expect a return that's a little bit above inflation, maybe 1%, maybe a bit more, over long periods of time. And in equities, we usually guide our clients to say that a good average is somewhere between like 6 to 9%, being very imprecise, with a whole bunch of volatility. And this is why we say that you have to have equity in the portfolio because of the extra growth that it offers. And you can see in this chart, there's periods in 2008 where the market was down a big chunk. But because there's that additional growth, given time, and time is your friend in investing, you can grow out of that deficit. So where the last chart showed you those nasty one-year bad returns, if you stay invested, and you basically reap the rewards of compounding. Next slide, please. Hand it over to Jason to continue.
Perfect. So, as I mentioned earlier, we do have some experience working with municipalities to create legacy funds, and I understand that's an interest of staff and council at this time. So we've done this with 7 municipalities using the legalist restrictions, and we do have one that works in the prudent investment space as well. But what we typically suggest is what's called an endowment model. So you take a principal amount of money, and then you take a bit off of the interest winnings year over year. And we'll get into a bit more detail about that. But part of what we want to talk about here is just some considerations about a legacy fund, some opportunities, and just as you go to frame it out, which we're happy to help work with staff to develop. But this is just kind of context setting. So the municipality kind of has to think, what does it want to achieve with its legacy fund? The investment direction, like, are you there to keep principal intact? Do you want to take a little bit of a winning or shave some profit off each time? These are typically the things you do with that endowment model. So next slide, please. So I may have got ahead of myself here. What we suggest is, and we're happy to take questions. We kept this kind of light on purpose. We're willing to offer that professional investment advice, the asset mix opportunities, as we've done with the neighboring municipality of yours in recent years. Depending on the objective and what they're trying to achieve, build that policy, set up the investment parameters, the target range and the max and the minimum for the various asset types. We would suggest that you have an investment policy related to this legacy fund. So you might call it a legacy fund policy. If you can set that up at the front end, as one of your neighboring municipalities did, it gives clear structure around this basket of money. And the purpose of that is that a successive council, we thank you for your service. The next council, many of you would be on it. Some of you may not choose not to be. At the end of the day, it doesn't matter what council's at the table. The policy speaks for itself and says that at the point in time, this council intended to do the following. So then you might also want to consider something to the effect of, what is the target? What is the approach? Why? How? What is the goal of the fund? So this is your official statement that guides that going forward. And then you can get into things even more tricky as a simple majority or a super majority to change it. And this is just council's opinion at a point in time. So we'll help with the treasurer to set that all up and support it. An important part of a legacy fund too is a rebalancing mechanism. And that's where Keith comes into play. Quarterly, we typically look at each one of our legacy funds if the markets are moving and say, municipality X, you intended to have 50% equity, but a range of 45 to 55, and Keith will show an example later. You're off track right now. So we would recommend the following. Now, the important part to know is under the legal list, care and control of the investments must be the treasurer's responsibility. It's in the legislation. So we can provide advice. We can even fill out forms that say, here's what you should do, but it's up to the treasurer to submit the form and offer the direction. And that's not because we don't want to, we can't. So as I said, we'll help do everything except for sign it. But at the end of the day, if you want to keep on course, that's a quarterly activity that we undertake to support that. Next slide, please. So we talked about some of these considerations. Should the fund distribute income annually, twice, every second year, once a council term, et cetera? What is a consideration if the markets were behaving inappropriate, as Keith said, and you may have only made 1% that year, but you targeted to take 3%? If you hit the floor, if you hit 10 million, which was the starting amount, let's say, do you dip below 10 million, or does the policy say you cannot dip below 10 million? If there's years where you're rich and you made 8%, do you still only take 3? And do you save the other 5 for the year when the markets may be soft? So these are all things that we can help work through. But again, set up properly, these become non-decisions because they're already set in the policy that drive you. Should the capital be protected? We talked about that. And then is the idea of transition planning. So it's fine to say we want to do something for the long-term fiscal stability of our community. It's X million dollars. Is it all invested at the same time? Or would you like us to work with the treasurer to develop a transition plan? Is there any contingency costs that may come from wherever this money is coming from? Is there any legal costs that you may have to pay over a period of time? So do you want to keep 50% of the money available for 6 months? And then do you want to have it go into the program over a period of time in a couple of tranches? These are all things to contemplate as well. And with that, I'll pass it to Keith and he can talk about one of our examples.
Yeah, thank you very much. Yeah, that idea of like transitioning over time, I keep saying the markets sometimes misbehave. You don't want to take necessarily a shotgun approach, deploy all your money and have it misbehave immediately afterwards. You'd feel very foolish. So this is not investment advice. It's just a matter of feeling good, being able to sleep about what you've done. I always tend to tell municipalities, spread it out over time. So that there's no market timing involved. If you've got $1 million, do half now, half in 6 months, or half in a year from now, and you're less likely to be trapped by Murphy's Law working against you. The other theme, sorry, what we have here is a neighboring municipality, and maybe I'll just go into this. If for this particular one, they set up a legacy account, I guess it was 2 years ago. And they did break their contribution into two tranches and invested it over time. In their case, they had a 50% allocation to equities. Their policies stipulated I think it was if I'm not mistaken, I think it was a 3% payout per year, which should be sustainable with the income generated from the investments. In their case, they had a low watermark built in. So what was initially contributed, if you ever get at or below that, the annual payments to council would be suspended. And that's one of the risks. So, and then you'd be on a income holiday until the markets recover. These are the things you need to consider, what you actually bake into the policy and what the expectations are. In this case, maybe I'll just say this is an example of what they did, and I think I've mentioned to the mayor before this presentation that most of our municipalities and legacy funds have allocations to equities between 30 to 50%. The more risk you take, the more risk that in the early years you might trip that no income clause if you have it written in. And that is one of the risks to consider. You'll also notice what we have here. There's a fairly, I'll call them goalposts. The target was 50% for equities, +5, -5. And my advice is to keep those goalposts fairly tight. And I'll just give you a little story. In 2020, we had a hiccup in the markets. I think most of us should remember that. And within a 2-week period of time, the TSX was off more than 20%. In that case, the municipalities that we had under the legacy model, their equities, which may have started at the target, were outside the goalposts. And we would review these every quarter. At the end of the quarter, we'd review what the allocation is. And if you have the wrong allocation, that means you either have too much risk or too little risk. The response, you bring yourself back to target. And this event that happened, which we all know about in March 2020, we told our clients to rebalance back to target, which meant buying equities after they had sold off. In retrospect, of course, you buy things on sale, and that's what they did. And they had this uncomfortable situation 6 months later. The markets rebounded. They had too much, and they had to sell some. And that's why I always say, try to keep the goalpost fairly close to the target, because it does give you an ability to maybe harvest a little bit of extra returns when the markets do have these gyrations. But those targets are there to be followed. It gives the treasurer something to look at. It provides guidance so the councillors know what exactly is happening with money, why the transactions are happening. And that's the whole point of the policy. You really do need a policy in place so there's guidance and everyone knows what the expectations are. What the specific target is for your community, I mean, we will have a separate conversation with Jonah after the fact and see try to figure out what's best. Obviously, the appetite of the folks that I'm speaking to now is actually a key point. I think at this point, I'll just turn it over to questions.
If I could just actually make one last point is you might wonder why you would have cash in the mix. It's in year one, for example, in this municipal case, they had said, it doesn't look great if we start off our legacy fund and we can't pay out in year one. So as part of our transition, why don't we leave 5% cash so we can? Turned out to be a non-issue, but these are the little things that you want to contemplate. Is if there's some big projects coming up and you want to make sure you can deliver at a certain year, you want to have that flexibility built in.
Okay, thank you for that presentation. We'll open the floor for questions, comments. Councillor Sackle, I'll ask you to turn your microphone on. Okay. All right, any comments, questions? Go ahead, Deputy Mayor Dickert.
Thank you, Your Worship. The Legacy Fund, and as you made reference to, there is an opportunity in the near future where we may have some money coming available. And I've always thought it would be nice to at least have an equal amount of what those book value of that investment was, and then a return on that. So, and I don't know what the exact numbers are at this point in time, but that's always been kind of in the back of my mind, is that we would protect at least what we had, and we have to decide then what we do with any extra there might be there. But I would imagine we're in that $3 or $4 million range of investment in a legacy fund that would continue to help us when our levy discussions happen, so that could continue to support the taxpayer and soften some of the blow of increases. So I don't know what the mix is. Looking at the chart that you had there, the 50% target, I think that equities is, in today's world, you almost have to be in equities because there's just not enough guaranteed income in the other areas. So, what you laid out there, that apparently one of our neighboring communities has, looks pretty reasonable to me. And I think obviously need more information on to make a final decision, but that's certainly aligns with my train of thought right now.
Thank you. Councillor Hawking.
Thank you, Your Worship. Do you have any municipalities that increase the equity higher than 50%?
At present, no. It's down to you could, but typically the municipal world is fairly risk averse, and it could be absolutely appropriate to dial it up. Because the investment horizon is so long. This is intended to be perpetual. So yeah, if this was not the municipal audience, I would say that an allocation of up to 70 or even a little bit higher could be appropriate. But both the products that we have available, our portfolios are conservative to begin with, and our equity portfolio also is very conservative. It tries to dampen risk, and we know our audience, and that's why we haven't typically recommended more than 50%.
Yeah, just in addition to that, so outside of legacy funds, we do have municipalities, some larger ones that do all of their fixed income investing on their own, and they do leverage us for equity. So we couldn't really say if they have more than 50% of their assets in that space with us, but we do have some in the tens or even hundreds of millions of dollars in that equity space. We just don't know what the rest of their portfolio looks like. Yeah.
Councillor Hudson.
Thank you, Your Worship. For the fixed income portion, does it need to be split out with bond and like government bond and corporate bond?
Well, that's actually baked into the portfolios we have. Both of our bond portfolios are diversified. They both have the Canadian government bond has a shorter maturity profile, so it's less sensitive to interest rate movements, and it has a meaningful allocation to Canadian banks type of corporate. Whereas the corporate bond, it's similar, but there are some differences. It has a longer maturity profile, which means it's more sensitive to changes in interest rates. And it has a larger proportion in corporate bonds. And because corporate bonds give, on average, higher returns, it's probably the better choice, especially for a long-term investment like this. If I were going to recommend, I would probably recommend 100% of the fixed income in corporate bonds. And that's just to say that was supported by recent research that was done by one of our external managers that said, they did the forecasting, the modeling, and we asked them the choice, should we have both or should we have just the corporate bond? They said, if the investment horizon is long, there's not a question. You want corporate bonds. It's a better diversifier.
So this example we showed you was before we had done that research. So this is a real one. This is newer learning. Yeah.
Okay. I have a couple of comments, a couple of questions, and you touched on it a bit. You're managing almost $6 billion for almost 200 clients. Tell me about your employees. You did touch a bit, but can you share a little bit more?
Yeah, we have a small but mighty team because we leverage outsourced portfolio managers for the product. So we're not managing the money; we're managing the managers who manage the money. But our front end team is 6 focused staff on the investment side for helping 179 municipalities and 20 public sector bodies.
Very good.
And we do have a chief compliance officer as well too, counted in that. So Keith handles the investment decisions, and then on the back end, the activities of the managers are reviewed by our compliance officer.
And
as well.
again, we're not doing the security selection or the day-to-day monitoring of the portfolios. Guardian Capital manages the equity portfolio. They have 2 assigned portfolio management individuals. They have their own compliance staff. They have, Guardian Capital is big, and they have all sorts of employees to do that. On the fixed income side is MFS, where they have the investments are managed by a very large team.
Thank you. So this one, it's probably difficult to answer. What's the average municipal return for fixed income allocations and the equities, which the difficulty will be each municipality has a different policy with the percentages. Can you speak to that at all?
I would just go with what I said during the presentation. And I don't want to get into the numbers because it would paint an incorrect picture. As I said, last year equities were up over 30% in Canada. The year before that was up 20%. That should not set your expectations because the average, actually, if we even went back 10 years, the average returns are about 11% going back 10 years on average. And I think there's an unnatural bias, and would not want to set expectations for that. You should expect 6%. If you get 9% over long periods of time, you should be very happy. For fixed income, it's not there for growth. It's there for ballast. It's there to protect capital and give diversification benefits. So over long periods of time, as I say, usually it's inflation plus 1%. Because of the gyrations in markets over the last years, it's trended below 2%. But the growth is coming from the equity side. But you need the fixed income there so you have more stability in the overall value of the portfolio over time.
Very good. Okay, and now it's just so everyone's aware, who determines the equity investment percentage? Like if our policy says 25% to 50% maximum, and I believe you did touch on it during your presentation, but who says whether it's 40% or 45 or 25?
You do. That said, you set the
The
target.
municipality does.
Or yes, the municipality does. Yeah, the council. I mean, you're working with the treasurer to establish that. Again, I would keep the goalpost fairly tight. So if you say it's going to be 40% is what you feel is appropriate, we'll certainly consult and give our ideas and advice. I'd keep the goalpost fairly tight so you know that you know what the parameters are. If it's between 35 and 45. If that's in the policy, you would know all the time that that's where you actually are. It's not an active call by the person implementing it. They're just following the policy.
Very good. And just my final comment, I understand the legacy fund idea because I was the coordinator for the Hospital Foundation with an endowment fund. And they didn't have a policy, but their goal was to never touch the principal and only spend the interest on the endowment fund. And it worked out very well. And again, that's in perpetuity. So
yeah, usually it's a 3% target per annum that you can draw down without eating into capital. And when there's a little bit left over, you'll leave it to grow. So in the lean years, you have something there to draw on.
very good. So Yelena, did that raise any questions for you, or you're good?
No, I'm very comfortable with everything that was presented today. I think it aligns well with the discussion we had at our last meeting. I think it also aligns well with our review of where we stand with our reserve funds, potentially a perpetual fund, different investment, different investment horizons for different reserves. So I think that'll be an interesting conversation moving forward and something I intend to bring to council in a little bit more detail and a little bit more Hanover specific, narrower, I guess, goalposts moving forward. So I think this was good.
Thank you for that. And now I'll ask, I was actually giving Councillor Cable some time to see if he wanted to ask any questions, but Councillor Hudson has a question or comment. Please go ahead.
Thank you, Your Worship. You had mentioned about periodically rebalancing. What's the typical time frame that you get in and move and shake? Did you say quarterly or is it less?
We update we have reporting on a quarterly basis, and normally, if I note that something's out of whack, I mean, I'm just monitoring. I'd reach out to the treasurer and say, you should do something. If we have something happen that's just extraordinary mid-quarter, I would run the numbers and then do the same thing. But typically, we looked at quarterly.
And that's something you would do with Yelena then?
Yes.
Okay.
Okay, so I think that's the end for questions, and thank you very much for attending in person. I really appreciate that. I prefer in person when we're discussing these kind of initiatives and, you know, huge decisions that we're going to make, but I appreciate you taking the time to attend, and I think this is the first time we've ever had one investment here, so thank you very much.
You give us a 20-degree day in the sun, I'll have every phone.
Okay, so next on the agenda is adoption of previous minutes. This is item 6.1, page 24 of the package. And I need a mover and seconder to put that on the floor. Deputy Mayor Dickert and Councillor Hudson. And I will just highlight one thing. You'll remember we were discussing our investment policy and we were talking about equities and what level of risk we were comfortable with. And we did approve the investment policy update. Item 1 was our risk tolerance was 25% up to a threshold of 50%. And we talked about a hybrid model for our investment income and withdrawal processes. We also preferred a separate strategy for reporting process for handling significant one-time inflows of funds. And then we want to establish a target balance for reserves, which will be coming up at a future finance committee meeting. So any questions or comments about those minutes? Councillor Hocking.
It's not with regard to the minutes, but I'm just, that was an excellent presentation. I'm just wondering why we didn't consider this before.
So I'm just going to stop you there and we'll approve the minutes. So it's been moved by Deputy Mayor Dickert and seconded by Councillor Hudson. All in favor? That is carried. So I'll turn to the clerk. Can we discuss that now or do we go under other items?
Sorry, as it relates to, I'm doing it now. As it relates to the investment policy in the previous minutes, as well as our presentation today, we could bring it up under business arising.
Which is next? Is it?
Yep. Yes.
Okay, let me get the agenda. All right, so business arising from minutes. Councillor Hocking. Perfect timing.
Thank you. Nice segue. So I was just wondering why we hadn't considered this before. When I look at that chart at 2020, it went from $400 from $100 investment. It went from 400 to 981 in the last 6 years on the equity side. That's quite a good. It's better than a 6% return. But I didn't even realize that service was available, and I just want to know why we weren't informed.
Well, Yelena can probably correct me on this, but we've always been invested with One Investment. We've just never asked to have a presentation. And
We've been doing this. Yes, okay. Thanks a lot. That's reassuring.
so yes, I don't know what year, but we've been with One Investment.
I was just looking up the year. It's going to take me forever to get into the files, but Chris, in all her wisdom, put $1 million aside that's now worth 2, following that exact same logic. So that's why we can have these conversations now. So we have been doing it. We just might have a little bit more wiggle room moving forward.
Thank you.
Yeah, and I was pleased for the presentation. That was good. So that's business arising from minutes. Anything else from the minutes? Seeing none, we'll move on. So now we're on to staff reports. This is item 8.1. And the report is FIN 0426. The subject is the projected policing staffing costs with a 10-year outlook. It's from Yelena Savic, our Director of Corporate Services and Treasurer. And I will ask for a mover and seconder, Councillor Sackle and Councillor Hawking. Yelena?
Thank you very much. Through you, Your Worship. Before I get into the report, I just wanted to kind of go over the agenda for today and frame what I hope the conversation looks like today and what the purpose behind putting all of these pieces together in this particular agenda is. And basically, it looks like 3 disparate reports and then a delegation, but the whole purpose of having the One Fund team come in and talk about a perpetual fund is to discuss the option of maybe having something in our investment portfolio that offsets operating costs perpetually. So that was the purpose of that conversation. The police services costing is intended to give council a heads up as to what a full police complement of 20 uniform officers looks like over the next decade and what that means for our operating costs, as the police services levy is about 39% of this year's levy. So that's a significant operating pressure, and that's something that we need to consider. And then the next 2 reports are looking at our existing balance sheet and what our current financial position is, which is very strong. And I'll get into that later. But then also looking at our reserves and what that position is, and then tying it back to that investment conversation around, okay, what reserves do we have? What's the timeline for holding funds? What do we need over the next 2, 3, 5, 10, 20 years? So it looks like a number of disparate reports, but I promise hopefully there's a thread running through today's conversation. So with that, I will get into the report, which is looking at projected policing staffing costs over the next 10 years. So at the budget meeting in November of 2025, looking at the 2026 budget, while we were discussing the mid-year hiring of additional uniform officers for the police services, council had asked what the long-term cost would be for the full complement of officers, which is intended to be 20 uniform officers. So we looked at roughly what that would look like. And I say roughly because it's based on a number of assumptions. And I've listed them all I've listed most of them in the report, but a couple of the key assumptions that impact this analysis are, first, that we are looking at a 1 sergeant structure instead of a 2 sergeant structure, and that's currently in flux. So this report assumes a single sergeant, and then we're assuming that the current contract remains in place for the next decade. That's not going to be the case, but it's really hard to project what will be in place at the next negotiation, so we've left it as is. We've also left retirement benefits as retirement benefits for the existing retired staff, because we don't know who is retiring and when and what that will look like. So we've made a number of assumptions, and that's all to say that this is intended to be very much a ballpark and very much an order of magnitude kind of conversation instead of a detailed, specific figure conversation. The other piece that I wanted to flag was I did a quick per household math at the end of it. That is also very much to say order of magnitude increase is what this looks like. It's not going to be that because the number of households will change. The staffing structure will change. Everything else will change. So these aren't exact figures by any stretch. So with all that said, the high level projection of staffing costs, and that is looking only at salaries and then employer benefits, goes from $3.2 million in 2026 to $4.4 million in 2030 as we hire the additional uniform officers, and then to $5.5 million in 2036 as those officers move through the ranks. So that's a 38% increase from 2026 to 2030, and then a 72% increase from 2026 to 2036. And that again reflects, it's not linear. It reflects hiring in that kind of mid-year phase for those 3 or 4 officers that are left. And then those officers move through the ranks, benefits accrue, experience pay accrues for the rest of the force, et cetera, et cetera. So that is the analysis. Those are the figures for council to consider. Looking at it from a per household perspective, and again, very much an estimate. In 2026, we're looking at about $950 per household. In 2035, that goes up to about $1,600 per household. So those are the figures that council had asked for. I'm happy to answer any questions around the model, the math, the assumptions, anything along those lines.
Thank you. Questions, comments? Good information. Councillor Cable.
Thank you, Worship, and thank you, Yelena, for the report. I'm trying to benchmark the financial increase to our projected population increase. And if I'm looking at the Grey County forecast for Hanover, I would say that we would have, I don't know what our current population actually is right now, but it says in 2021 it was 8,260. 2026 it's supposed to be 8,900, going up to 10,700 approximately by 2036. So we're seeing a growth of about 1.75% per year. And if I'm looking at this correctly, on average, it would be about a 5.5% kind of compounded increase per year for police cost increases. So I'm just wondering, how do we find a balance between the tax burden to do this and what's realistic going forward and what's required by Hanover Police Service? How do we find that balance? And I'm wondering, currently it would be my assumption that we're increasing by 1 officer per year. That, in my opinion, is not sustainable for us to do it that way. Like if I'm looking at that, in the next 4 years, we're going to increase by on average $307,000 a year just for police costs from year 2026 to 2030. So is there at all an option to look at adding an officer every 1.5 years or every 2 years? Like I know that we had a fixed number for a long period of time, and now all of a sudden there's a push to increase rapidly. But certainly it would make more sense to do it over the long term, in my opinion.
So I think that might be, I mean, I know that that's definitely a question for the Police Services Board in terms of the levels of service and the staffing required to provide the town with what level of security is needed. I know that I want to say it was Smiths Falls, maybe that was the comparator, and they had a force of about 25 staff. So from a staffing perspective, from a levels of service perspective, that is, I think, entirely the purview of the Police Services Board to dictate the pace and the need. There are obviously the financial considerations, that's where I come in, but there's also the overtime that, fluctuates as more officers are hired. There's other considerations as well. So I could provide financial models, but when it comes to the levels of service and the pacing at which the Police Service Board and their team needs additional officers, I think that's a Police Service Board specific question and not something that I can answer.
I guess it's just, how do we find that balance, right? Between, we know that we need 20, right? And do we need to have 1 each year to get to 20? Or can we have 1 every 1.5 years to get to 20? Just so that we can try to find that balance in the annual increase. And so I don't know how the council can work better with the Police Services Board to advocate for the the balances approach. We also know that we have a police service building that's coming on board, which is going to cost us hundreds of thousands of dollars a year in order to finance, right? And how does that work in? That's not necessarily a question for you, more of a statement, right? And we do have representatives for the Hanover Police Service Board on council, and I hope that we can find a way to work together.
So two things. I agree it is a police services board direction with respect to staffing and service levels, et cetera, et cetera. This report was reviewed by Chief Knoll, and he did provide some comments accordingly. It has been suggested to Chief Knoll this should be shared with the police services board. Again, we have to, we can't say this must happen, but we are suggesting that be shared. And it may be some feedback, if that's council's feedback, that our members from council to the police services board would need to share accordingly, should this report be shared. Which I have to assume it will be.
Go ahead, Councillor Hocking.
Right now, our staff complement is the same as it was in 2014. We have a chief that works hours and hours and hours and overtime, basically because we don't have enough police officers. We have a whole change of social issues that have come upon our town because we are considered a hub. Sometimes that's a good thing, sometimes it's not so good. You know, I used to, in my former life, always hear, oh, you got to do a bit more for less. And, you know, when you adopt that, you're squeezing the sort of, well, you're like squeezing the orange, and there's only so much squeezing you can do. I would hate, and Chief Knoll will be retiring in a period of time, and I think it's incumbent upon council to have that complement in place at the time he retires. And Yelena just pointed out Smith Falls, same size of municipality, 25 more officers. We have the second highest rate next to the city of Owen Sound in incidents per capita in the province. So I don't think we should be squeezing them just you know, for the sake. Maybe we can look at other ways to offset that cost, but I've learned a lot being on the police board. In fact, when I first got on council, it was suggested that we consider OPP funding. And after seeing what they do for our community, that is completely outrageous to even think that way. Just talk to, you know, our neighbors to the west with Brockton, and they'll tell you. So I think we get good value for our money, and I think the compliment is well deserved, and it's needed for the safety of our citizenry. You know, we go to sleep every night, and you don't know what's going on from midnight to 6 o'clock in the morning, and what they're involved with. You've seen police reports recently, the level of crime, and you know, now we have weaponry involved, and so. I think we're going after the wrong thing when we start to say to them, let's squeeze you a bit and put it over a period of time. So, but yeah, you know, sometimes you got to bite the bullet and move on. Yeah, but those are just my opinion as sitting as a board member. Thanks.
Deputy Mayor?
Yes, I just, as this conversation gets a little deeper, I need to declare an interest in this topic, so I will declare that interest at this point in time.
Thank you. And I want to say the Police Service Board is aware of the pressure it's putting on the town. It's discussed at every board meeting. Like, they're well aware of, it's the largest part of the budget, but their pressures of providing safety to residents and more than just Hanover residents, right? Because we are a regional hub. Everybody comes to Hanover and we want people to come to Hanover. But there's pressure there where we're not getting the taxes from other people. There's also new pressures that are happening. And you'll see in the next police board minutes with the courts. They're now scheduling 4 trials in a day. They're lucky to get through 2, but it takes a police officer sitting there for the entire day, and then that trial is canceled. And now we've had to backfill because someone's at court, and then there's got to be an officer in town. So the Crown Attorney is aware of that, but there is no solution for it. So we're under, I can't say under the gun, but there are pressures that we have no control over, but are discussed. Like my thoughts, could we send one officer to do all the trials? No, it's the investigating officer that has to attend court. So there's always something that is holding us and we have no control, but we do discuss trying to find savings at every meeting. Like, do we have to spend this? Do we? Like, so it's on the agenda. In fact, I mentioned it to Chief Knoll this morning. I said, I read the report. He said, yes. I said, is there anything we can do about that? And he said, yes, we'll, keep looking for options. So, Councillor Hocking?
Yeah, and I just want to echo the mayor's point there. He's always looking for ways to make it more efficient. But there's, as I said, there's just so much more. There's only so much he can do. The thing that I'm going to pick up on the mayor's point about being unfair. The chief says approximately an officer a day goes to the Travelers Inn Motel. Travelers Inn Motel is housed by people who live in Bruce County and are put there by Bruce County Social Services. They then take them up to the hospital, which impact our emerge. Now, do you think that's fair? We get nothing except more work, more demands, and more use of our services. So yeah, the world's not very kind sometimes, but you have to provide the services. You just can't say, well, they're from there. I'm not going to go up and deal with it. But that's added stress, added requirements for our particular services. And as I said before, there's a plus for being a hub, and there are some negatives from being a hub, and that's one of the negatives.
And just to follow up, the chief is very open to start dates of officers, but it depends on the pressure that's happening with the service. And it also depends on who applies. There may be times when no one applies, and then the officers have the overtime. Because it's just the way it is in the service. And I would suggest that, we have the chief here for the annual report and the business report that is once a year. Like, let's spend a little longer time instead of saying you've got 10 to 15 minutes. Let's book him in for more time and ask these questions. He'd be more than willing to attend. So, Councillor Hocking?
Just keep thinking. Another issue is Bruce Power. I mean, they're a great employer in the area, but are you aware that police officers are leaving municipalities and transferring to Bruce Power as a security guard? Because guess what? No night, better money. And so it's just a continual influx of different issues that police forces are facing that they didn't face 10 years ago. Anyway.
I think it'd be a good idea to have the chief before we start budget in the fall and have him come and to a finance meeting, a little more on the casual side, and just allow us to ask the questions, and he will give you specifics more so than what Councillor Hocking and I can give you. He would have the numbers. So moving forward, we'll do that. That should help. Any other comments or questions with this report before we receive it for information? Okay, Sherry, anything else?
Well, no, I was gonna just clarify with Clerk Vicky, because I know you asked for a mover and seconder,
Yes.
but they are for information,
Yes.
so we don't need a mover and seconder. I just wanted to clarify that before we got too deep into the rest of the reports as well. So, correct?
That is
Perfect.
correct.
Thank you.
Vicky gives me the agenda and I don't follow it. So
do.
I did say it was for information, but it's habit to have a mover and seconder. So, okay, so if that's for information, thank you. Now we'll go on to 8.2. This is also for information, so I don't need a mover and seconder. So this is report FIN 0526. The subject is the 2025 preliminary year-end financial position. And again, it's from Yelena Savic, our Director of Corporate Services and Treasurer. Yelena?
Thank you. Through you, your worship. This one I can answer any questions on. We have had the auditors on site from April forever. I don't know. They were in here the first 2 weeks of April. They're still sending emails. They're still working through the official financials, but we have a pretty good idea of where we stand. I don't anticipate too much changing between this draft and the final financial statements that will come to council via the Finance Committee in July. But I wanted to flag some items that look very different from last year and kind of explain the difference and give you a quick overview of where we stand at the end of 2025. So that is the purpose of the 2025 prelim year-end financial report with the balance sheet with giant unaudited figures in the background in case anything significant changes. But like I said, I don't anticipate anything changing. So to begin on the asset side, we've got accounts receivable balances that are significantly higher than they were last year at about $1.3 million. Sorry, $1.5 million. That just reflects the combined construction project with the county. We invoiced them for their portion of the work. The invoice was processed in 2025. The payment was received early 2026. So the receivable is sitting on the books at the end of 25. It's cleared. They've paid, I promise. So that's all good. I just wanted to flag that it looks like a significant jump in receivables, and that's where that comes from. The other significant jump in receivables ties to our significant construction activity over the past year. So grants and subsidies receivable is about $3.5 million. We have grants from ISIP, the Canada Investing in Canada Infrastructure Program for the water tower. And then the SCADA project as well. So that is claim based. So the work gets done, we pay for it, and then we submit a claim to the funder to get reimbursed for our expenses. That's what that huge balance is. We expect that to be paid within the first half of 2026, but it takes the province a little bit to process those. So the other piece is the TCA work in progress. That is a significant figure as well at about $9.7 million. That reflects the water tower and the interim plant upgrade work. The water tower looks done, but the work on the inside is not yet done, so it's not technically yet completed, so it's still sitting as a work in progress. Same thing with the interim work on the plant upgrade. That, once it's finished, will get converted into an official part of our assets on our balance sheet. On the liabilities side, the holdbacks are significant, again, related to the fact that we've had a lot of construction. So we've got a lot of funds sitting, waiting for final kind of construction review approvals from subject matter experts to release those holdbacks. And then we've got some long-term debt that we took on last year for the trails and landfill at $1.5 million, and then the fire hall at $5.36 million. So the town's year-end financial position is stable. It's balanced. We've got assets of about $123 million. When we look at what that consists of, we are not sitting on $123 million of cash, unfortunately. We are sitting on $123 million, mostly made up of roads and pipes. So that is where the wealth sits. That's also tying back to perpetual funds and reserves and all of that, $110-ish million in infrastructure that sits on our balance sheet as an asset, but it is also very much an obligation and something that we need to maintain in the future. So as we continue to build throughout the town, our assets will increase, as will our future obligations for maintaining those assets. So that's why the reserve conversation, I think, is timely, and the significant bump in assets between 24 and 25 also reflects the need for future planning for eventual rehabilitation of those assets. If anyone has any questions, I'm happy to answer them as they relate to the balance sheet.
Thank you. Comments or questions? It's good information again. All of the reports are good information to have. Anything, Councillor Cable?
One small wondering, sorry. On the balance sheet, there's a line that says recreation dash gift certificates issued. And I was wondering, is that different from somebody that buys a pool pass and it just hasn't been used? Or at some point in time, like, is this kind of like chamber bucks, how we always see it sitting on the DIA list and it's kind of, they're floating out there? Are these certificates that at some point were issued and now we're waiting for them to be cashed in? I just wasn't sure what that line was.
I'm very much looking at Sherry for this one, but if Sherry doesn't know, I'll reach out to Laura and check.
Yeah, you may have to reach out to Laura. Like, they definitely do have a gift certificate option. Like, I could buy a gift certificate to gift to someone, but that is a fairly high dollar value attached to it. So maybe that's more the
Oh,
question.
that's what I just wondered, if it's
That's
just been
maybe
sitting
more
there
the
year after
question.
year and for some
Could
reason it
be.
just stuck out this weekend. I don't know, but
Could be. Anyways, so yes, they definitely have a gift certificate option in process. Not sure the balance there. So that might be a combination question of double checking with Laura and the balance part.
We'll get back to you on that, to all of us on that. Okay, we'll go on to the next report. I don't see any hands raised. So this is FIN 0626. Subject is the 2025 preliminary reserve and reserve fund position. And it's from Yelena Savic, our Director of Corporate Services and Treasurer. And the reason why I say this every time is because some people tune in at different times and they may not know who's speaking or what they're speaking about. So again, this is to be received for information. Yelena, the floor is yours.
Thank you, through you, Your Worship. And also, you know, you might have a delegation that mispronounces your name 3 times, so it's always helpful. So the reserve and reserve fund position is unaudited yet again, but it provides a pretty good picture of where we stood with reserves and reserve fund balances at the end of 2025. So for the viewing public, I'm sure there's an auditorium of people watching this presentation, but basically the way that reserves are split up, we've got reserves that are discretionary. Council kind of decides how to use them on an annual basis throughout the budget process. And then there are the reserve funds that are limited in terms of their use based on policy, based on sometimes external funders like the CCBF grants and provincial gas tax grants. So I'll kind of provide an overview of both, where they both sit, and then what that looks like for the town. So overall, our discretionary reserves modestly increased in 2025. So we've got a pretty stable reserve position. That means we're contributing roughly at the same pace as we are taking funds out of those reserves. However, the general purpose reserve balance decreased, and then the amounts set aside for water and wastewater capital projects increased. So as I say, the discretionary reserve balance remains stable. The reserves that make up that pool shift throughout the year based on which projects are funded through which reserves. And then I did note on page 2 that a more detailed summary of that project work is in FIN 0726. That is currently a theoretical report. It will be coming to the next Finance Committee meeting. So you can see the reserve balance in 2025 at the top of page 3. Our general reserves have decreased, but our water and wastewater reserves have increased relative to their opening balance. Table 2 summarizes the reserve fund activity for 2025. So it looks at the TCA reserve fund, the Investing in Hanover fund, water, wastewater, major capital funds, and then parking, cash in lieu, which is something we can't really touch. It's legislated in terms of what we can use that for. And then the federal gas tax, also legislated in terms of what we can use that for. So you can see, looking at the top of page 4, the TCA reserve fund has increased, showing this was largely from the year-end surplus being allocated back to that reserve. Investing in Hanover has also increased. Water, major capital has decreased significantly, and wastewater has increased significantly. And all that this reflects is the fact that we have been setting funds aside for specific projects, like the water tower replacement project that was funded partly through reserves, partly through grants. So we've drawn on that reserve for that specific work. And on the wastewater side, we're building up that reserve for specific future work. So long and short of it is we are in a fairly good position with our reserves, especially for a town the size of Hanover. And I don't foresee any significant issues. The one thing that I would recommend as a follow-up report to this report is a more detailed kind of analysis of what the target balances are for each of these reserves and over what time period. And then based on that, we can look at, are we setting aside enough in each of these reserves? And then what can our investment horizon look like for each of these reserves? And then what can our equity portfolios or our equity and fixed income splits look like for each of these reserves? So I think as a follow-up, we can look at this in a little bit more detail. But for now, as a broad kind of overall financial picture, the town is in a very strong position and I have every intention of keeping it that way. So if you have any questions on the reserve side, I'm happy to answer.
Thank you. Deputy Mayor Dickert.
Thank you, Worship. Thank you, Yelena. My question is regarding the funds that we hold for Saugeen Mobility. Are they listed in here? Because that money will be coming out at some point in time when Bruce County takes over the financial piece of that.
Yep, I've excluded that one specifically. So that's the provincial gas tax. That one's not included, but the federal gas tax is included. So it's about $250,000 from the federal side. We usually just put that towards a road project. But on the provincial side, it's just flow through funding that we really don't have access to. So I've left that out of the report. I've also left, like, the police services and the library has several reserves. So I've left all of those out as well because we don't, as the town, have access to those funds.
Questions, comments? Councillor Cable?
Thank you, Worship. Just want to clarify if I'm reading correctly. So this is kind of the bottom of the first page, page 42, leading into the top of page 43. So overall, from the 2025 budget, when it's all said and done, the final balance is that there was an operating surplus of $49,000. Is that correct? Is that kind of our final, when everything's out in the wash, there's $49,000 that was a surplus?
No, so on the surplus side, that's still it's still subject to the audit. So the exact figure is still in the works, but the surplus, when we look at the way that an operating surplus is defined in our policy for allocating the annual surplus, it says anything after we've allocated the funds where they need to go based on the budget and the reserves, anything left over, which means anything left over on the capital side and anything left over on the operating side, which then conflates capital projects that were delayed and just didn't happen. So that's kind of a false surplus. It conflates capital projects that came in under budget. It gets mixed in with capital projects that went over budget, and then that all gets jumbled in with the actual operating expenses. So I was looking at the operating budget and looking at our line by line, kind of roughly where we stood at the end of 2025. On the operating side, very few items were below budget. Most items were very close to 100% or over. And that reflects how lean the operating budget was and how difficult it is to stay lean when you have snowstorms, when you have specific things that just have to happen as a municipal service provider. So I'm happy to bring back to council a more detailed report on what the surplus looked like. The final figure that was eventually allocated to the reserves, according to the policy, was about $480,000. That again was largely capital projects that were deferred, projects that came in under budget. A lot of that was the multi-million-dollar water wastewater projects that came in under budget. So I can bring back a much more detailed kind of breakdown of where that sat.
I don't think personally that I need it to be overly detailed. I think I was just wanting to know from the operating side. We know that we go through the budget and we have estimates, and when we do the budget in October, all of the costs for the year haven't been accounted for. So just to know overall where we sit. And I did have one other question. In this, the paragraph that follows, it talks about the withdrawal from the town general reserves of 1.28 million, and it says that splash pad was 426,000. So that's the amount that the splash pad cost after fundraising was removed. Is that correct?
I'm going to have to check that. I'm pretty sure that is inclusive of the fundraising. So the fundraising was sitting in the reserve. There was fundraising of about 280 maybe thousand or 200,000 that had been raised the prior year, allocated to reserves for the splash pad. So I'm going to say that the majority of this is the fundraising that had been allocated to reserves and then pulled out again. So prior year, it would have artificially inflated the closing balance or the opening balance of the reserve. And then, when we pull it out, like, it was already spoken for really, so it wasn't there for any other project. But yeah, I'm pretty sure this includes the fundraising as well.
If I can have one follow-up. This question came up at Parks, Recreation, and Culture, and if it's not fair to ask at this meeting, I can follow up with you. But there was a note that the cost for the splash pad was over $100,000. That was the figure that was thrown out at Parks and Rec, that the cost for the splash pad each year is over $100,000. Is that fair to say that that's the loan repayment plus operating? Is that figure that they're seeing? Is that fair?
I will have to check that. We have a very specific breakdown of the costs for the splash pad in terms of the operating side. I'm not sure if that would include the loan repayment as well. So I'll double check what that figure is.
Thank you.
Councillor Sackle.
Thank you, Your Worship. Thank you, Yelena, for your report. I too had a splash pad question. So originally we had a campaign going on the radio about, donating your money. And I'm still hearing that. So my question is, are we still getting money for the splash pad?
Not that I'm aware of. Although we should probably stop advertising.
Can I ask where you're hearing it?
Well, we listened to Owen Sound radio, and we listened to 94.5. So one of those two stations is promoting something, and they're saying, and donations go to the Hanover Splash Pad. And I'm thinking, isn't that finished by now? So I'm just curious.
So 94.5 is...
Exactly.
Councillor Hudson?
There's an add-on for Miller Insurance, and they do mention the splash pad as part of what they have done to promote the community. And I have a feeling it might be part of that advertisement.
So it's not an actual request for promoting for donations. It's saying that they have donated to it. So. Okay. Anything else? Okay, very good. All right, item 9 is items for discussion, and I would take that as, does anyone have any items you want to discuss, or do you want to see any future items on the finance agenda? Sherry, go ahead.
Just Yelena's identified that based on kind of the task lists around finance and various reports, that it would be prudent for us to have add a June meeting to our calendar for finance. So that date would be June 22nd at 4 p.m. So if you can just note that date in your calendar, and staff will send out an invite accordingly. So you would see us meet in June as well as July for the finance committee should say.
Thank you. Anyone else? Anything you want to see, discuss, have more detail? I think Yelena's got a list already, so that's good. So, all right. And as always, if you think of anything, please send an email to Sherry and she will forward it on to Yelena or see the value of it for us. So that's item 9. Now we're on to correspondence, and we have 10.1. This is from MNP, our auditors. And it's just a letter stating that the audit planning process with dates that are coming up for us, the town of Hanover, and the Hanover-Walkerton landfill site. So receiving for information. So that's it for the meeting. We just need adjournment at 5:25, moved by Councillor Cable, seconded by Councillor Hudson. All in favor? That is carried. Thank you.